Hey, everybody, good morning. Happy Monday. Hope you all had a good weekend. Wanted to do a little update on the power trend line, my favorite, as most of you who follow me know, and also a little bit on the stock market, some defense stocks, also some Trump crypto stocks. Give you a little update on how all of that is going today. All right. So I've shown the percentile bands of the power trend many times. This one is the most detailed I can make it. Here's linear scale, just to show you how wild it can actually get. Okay, this is out till the end of two full more halvings from now, 2023 and 2033. And just to show you kind of how wild these things can be, these bands are based on a multiple. Okay, so I'll explain it again when we actually put this on log scale. But wherever the price is over the trend line, okay, that's gonna register a multiple every day. And what I do is I take percentiles on the multiples just to see where we are. And the max is this one. Okay, so if I take it off, it's off now. Put it back on. Look at the scale. We go up to 2.5 million per Bitcoin. But if I go to the highest multiple that ever has occurred on the power trend, the scale goes up to 10 million. Okay, and these are from early days. Okay, it was very volatile. I don't at all see this happening again for Bitcoin, the 100 percentile move. I'll show you in a second, but just to show you on linear scale how crazy it is. Let's put it on log scale. All right, get the old rainbow chart. Now, the all-time power trend line is here, 96% R squared. It's great. And when you project out, you will get the smooth line. But as I'm doing now, to show you, again, this is based on multiples of the trend at the time. It's not as helpful, actually, to make a smooth trend line with this perspective into the past. It's better to show how it evolved over time. Okay, so with that in mind, again, I'm showing the black line, the all-time trend line. With that in mind, we can sort of go through it again. Keep in mind the way these colors are, and I know you can't see the 50th percentile even great because it's in yellow. It's number 5 on the screen, but yellow is basically in the middle, right around trend. Red is really hot, and sort of the purplish blue is really cold. All right, so let's go back in time and zoom in. And some people have said I've moved the cursor too fast and I zoom in and out too fast, so I'll try to not do that this time. The 100th percentile, okay, where it's a max event, okay, where the trend line at the time, if you took the price at the time divided by the trend line at the time, you get a multiple. This was the highest. It was 2011 when we hit $35 per Bitcoin, June 2011, relative to under $1 a year before. This was the fastest growth that we had in the history of Bitcoin. Okay, so drawing these percentiles, looking at the multiples, there's where you get this 7.8x. Okay, and I'm actually not showing the trend at the time. You have to infer it. But if we go, let's go back to the 35. Just take $35 divided by 7.8. Okay, so you're going to something around $4. If it was 7, it would be $5 would be the trend line. That was the trend line at the time. So the price was screaming hot over the trend at the time. Again, I'm not showing the trend at the time, but I am showing you the bands so you can kind of see how things have evolved. So we went really hot here in 2010, 2011, and then cooled off there the start of 2012, where it was actually completely flat. the power curve, and then heated up again to the top in the double top, actually, in the year 2013. Okay? But notice still, as wild as these swings can be, notice that the black line, it's not, the all-time, all right, the smooth black line. It's still, it's still all in between these crazy days, which shows you it's a really good model. Remember when I did this with exponential trend lines, it doesn't work out that way at all. So let's go from the 2013 top to the 2017 top. This was called the crypto winter at the time. We went down to, $200 per Bitcoin. January 2015 took over a year, and then even the next year was still pretty low, close to $200 per Bitcoin. This really flattened that curve out that was so fast in 2010, 2011. It flattened it out. All right, then we had the big blow off top again, 2017. Now here, it's interesting to show all these bands and to read through them a little bit. This was around the top. I think it was the 16th of December, actually, I can't zoom in on that. It's 16th, 17th December 2017, somewhere around $20,000 per Bitcoin. This is my close on that day. Notice again the 100th percentile, the thing where the arrow is pointing down. Okay. Didn't actually quite hit it this year. Okay. This is a residual from 2011. All right. But at that time, notice where the 90th percentile is. It means 90% of observations are going to be below that band. It's well below. We spent, comparatively speaking, perhaps not a lot, but still we spent a couple months above the 90th. Okay. I'm not going to take them all off, but just the second band right here. Okay. See my mouse cursor, this number 9. So we started to break above it in October. We were above it until March. So a good quarter of the year. But still, Bitcoin is developing this trend line, and this trend line was really sort of finding its feet during this top. That, again, we go back into the bear, and grandma forgets about it, and life moves on, and people just forget about it. But remember what I always say, it was somewhere around here where you can start to see what you're going to see when I zoom out and then zoom back in is these bands will now start to be, even though I'm showing you the evolving nature of them, they're going to be around this black line forever now. Not forever is the wrong word, but until today. Okay, they really start to form the basis of what this all-time black trend line starts to look like. So take it off. You can see, obviously, a little bit high here from the 2013. Then we go completely flat and up again. But if I reset the zoom, and now I'll start from, say, end 2016 all the way till today. Look at that. Though the price can be up and down and all around, those bands are in a pretty straightforward lower left hand of the chart to upper right. And that's because it's following the nature of this power trend. And when I say that, I don't mean that this power trend is good morning, BTC for plebes. Good morning. I don't mean that this power trend is something that's not explainable. I mean that when you see this trend line, which I'll put back on here in a second, it's a representation of network adoption. That's what I see when I see this black trend line. Okay, so I'm going to put it back on right now and look at that. So this black line is the all-time trend. That's if you take all the data from Bitcoin Pizza Day 2010 until my last day here, which I think is the 21st of March. No, it should be 22nd. I don't have it on it is like 22nd, but just with the nature, I can't catch every day on the Zoom here. All the way from 2010 to March 2025, if you run a regression, It's going to give you that black, smooth line. But look at the actual behavior around how that trend line has evolved over time. It's remarkably consistent from the end of 2016. And that's what I want to reiterate to where we are today. Okay, so obviously we had the tops here. And again, here in 2021 now, we had the double top. The first top was greater, was more momentum compared to the second top because we spent more time above the 90th percentile at the time. All right, so we went over it in February 2021. There's a lot of meme stock craze there, and people were home trading all the way till May. So 3 months. Actually, it's a similar amount of time from the 2017 top. I thought it was a little bit longer. But we go back up and kiss it again. I'm looking at the number 9, the 90th percentile here. And then we fall back down again. All right, but if we can then, let's zoom into, see what's happening today. People get all worried. People think that we're way overvalued or whatever Trump does with his next Bitcoin announcements or the strategic reserve announcement or whatever Lutnick says is really going to move markets. It might. But really what you need to be thinking about is we're just on a standard power curve of network adoption. My opinion. My opinion is that we need to be looking at it this way. So in this point now, it's been almost a year since we've hit the all-time trend. Started to bump above it about a year ago. 68,000 at the time. The trend was 65,000. And then we've been up and down and, some uncertainty last summer, silly season with U.S. politics. And then when Trump got elected, went back above. And now we're just dipping below again. To where the price is about 84,000, 83,000. It's 85,000 actually as of my recording this. Not on this chart, but as of recording. Remember, this is a daily chart. The trend line is 95. So we're about $10,000 under trend. That's true. That's some weakness. But it's not like we're going back down to the 30th percentile or the 20th percentile or even the 0th percentile, which is like literally the last observation. And just so you see now where the arrow is pointing up there, this one, the purple line, that didn't happen all the way as well back to the early days, 2010, 2011, based on the multiple. So we're nowhere near. And I would not see, again, statistically, I just don't see anything like that. What's the price there? $11,000 per Bitcoin. That's pretty wild. Think about when Bitcoin was hovering around $10,000. It was only 5 years ago, the 2020s. Before it screamed up to 60, it was still, 20 in 2021. In 2020, it was about 10,000. Long time. Okay, so I don't see that. So then you have to start looking at the other bands, looking at what they say. The 30th percentile, $48,000 per Bitcoin. We're pretty comfortably above that. 50th, $70,000 per Bitcoin. That I thought we might have hit with the weakness, but we didn't. It stayed comfortably above 80. And the 60th percentile is 88,000, so we're not above that. So we're somewhere between the 50th and the 60th percentile, the 5 and the 6. And again, you really got to zoom in to see those lines. It's right where my cursor is. Comfortably on trend, I would say. Comfortably on trend. And if we don't go out, obviously it starts to look smooth here because nobody knows the future and we just project out. But if we go back, if we go out to end of 2025, people presume the 4-year cycle, we can start to see the craziness. Now, based on the numbers that I just showed you and the multiples, and this is another thing, I haven't really been pointing out the multiples, but in the parentheses there, that's the multiple over the trend at the time, which always happened based on these percentiles. Not always, but how do I say, statistically happened. So 90% of the time at December 2025, the price is 90% of the time going to be below a 2x multiple. That is price divided by trend 2x. What is that actual in dollar terms? 250,000. The trend will be 125,000 by the end of next year. I think that it's very likely that it could be at or under that. I mean, we have 90% probability there. Now, you remember in my other chart where I go up to the 2 sigma move, or roughly 97.5% of observations, that takes you to a more fun number, $300,000, $400,000 per Bitcoin. That would, in my opinion, absolutely be the top. I do not see this 100th percentile really ever again, which is $1 million. I just don't see it. I just don't see it happening. But I like, I like these, looking at from these multiple, the multiple perspective. My buddies, Plan C and Cena, you can find them posting a lot on Twitter. They're doing the percentile regressions. It's a different analysis. Mine is based on the multiples. All right, the multiple at any time, price over under trend. Theirs is looking, the slopes of their curves will always be different. So the 100%, it's always going to look smooth, by the way. It's going to look prettier than mine. They can go back in time and get smooth bands. I can do that too, by the way, but the multiples aren't as accurate. So this is why I have to do it this way. But again, just what I've been doing. It's how I've been showing it really for years now. I think it's helpful to look at these multiples to understand. So if I tell you that the trend line at the end of this year is 125,000, 90% of the time it's going to be below 2x. That's 250K. It's a target to assume for, assuming that we do have a pop, like we had here, like we had here, or like we had back here. So that, in my opinion, is how it's going to work come this top. And then if we can go out just for silly season to the end of the decade again, you're going to have something like 500,000, 560,000 by December 2030. 90th percentile move there would be $1 million, $1.1 million. So there's a lot of noise, a lot of craziness in the world these days. But if you talk about relaxing, enjoying the trend, certainly I think you can sleep better at night, not trying to time the markets or anything like that. Let me know if you have any questions on this. I'm going to show you some stocks now. This isn't as elegant. I like to try to show things on my own charts, but I'm going to show you a trading view screen here. Okay, so Trump pumps. This is a list I have in TradingView. I would have got it right to his inauguration, but I would have made that my own chart for that, but I just didn't have time. So here's just a couple stocks. I'm not saying it's going to stay this way. I'm not trying to say Trump pumps are all going to be wrong, but it's certainly not looking good over the last 3 months. And certainly his own coin, the Melania coin, they're the worst. These are 3-month perspectives, and theirs, of course, remember the Trump and Melania, they only started somewhere around here. Okay, but even from there, they're down 94%. So year to date, it's all the same, 94%, 70%, 94% for Melania, 70% for Trump. We got Tesla in there, not looking good. He's been pitching Teslas. His media company, there's a variety of these World Liberty Financial tokens. Whatever. This is the one that actually popped here, but it's down 38%. Tron's going to be another one because his buddy David Sachs is pumping that one, down 26%, 3 months, and then 3 months Tron, who also buys World Liberty Financial. Seems that he was avoided some SEC investigations for buying Trump's coin. Only down 10%. I show these not to say that these are always going to be down at all. I'm just showing this is the sentiment at the moment for some of the Trump pumps. They are down. Now, as you know, living in Eastern Europe, we're very concerned about defense and how the state of the world is looking for transatlantic relations. U.S. stocks not looking good as well. Okay, so focus on the 3-month performance. There's only 4 stocks, U.S. publicly traded stocks that I'm tracking here, the big ones, which are where are up. The rest are down. The rest are down. And Raytheon's the only one that's kind of up big. So that's how it looks in the last 3 months. And if I could do from his inauguration, which was here, they would be even further down. But I can't give you an elegant chart from his inauguration at this point, unfortunately, just the last 3 months. Then, of course, if we look at European stocks, it's the opposite. Now, again, I'm not showing this because you should go out and trade European stocks. I'm not saying that European stocks are always going to perform American stocks. This is a paradigm shift, I think, that's happening. And it's pretty wild. Rheinmetall is the German company, is the best performer. It's doubled in the last 3 months. And I got some Italian ones, Swedish ones that are close to doubling in the last 3 months, which is really wild. Really, really wild. A lot of people say, we have a military industrial complex. I'm a fan of Ryan Macbeth. He's been interviewed on the channel. To some extent, I agree with Ryan Macbeth here. Look at the market caps, right? And just think about the market caps of, say, Apple or Microsoft or even Procter & Gamble, some other just regular Dow companies. They're not huge companies, which is interesting. Of course, there's some big private companies. Here's old. This is still public. This is public, of course. Old tricky Dick Cheney's Halliburton, $20 billion company. But, we got Raytheon is clearly the biggest, $175 billion. But it's not at all in the realm of Apple, Microsoft, or the FANGs, or whatever. Let's go and look at the price market caps of European. Of course, it's even less. Rheinmetall's 50 billion euro. 50 billion euro for Thales. Leonardo, 26 billion. This is 197 billion crown. Yeah, it's nice. They do the conversion here on TradingView. So should be roughly like $20 billion or euros. A little bit over that, I guess, because it's above Dassault. So it's actually a nice little comparison here. And I do think that this will continue. Again, I'm not saying it continues all through Trump's term, but I do wonder how much longer Trump will keep playing this game, because as an American Latvian, as an American European, I certainly would appreciate a strong transatlantic relationship to deter Russia. But Europe may have to do it alone. It may have to be what Donald Tusk said. We're going to have, which is totally rational and logical, by the way. 500 million Europeans are going to have to not rely on 300 million Americans, but they're going to have to rely on themselves to deter 140 million Russians from attacking. Of course, Ukrainians are on the front line. They're the ones that are paying the greatest cost. But as everybody knows, we're in the Baltics. We're next on their list. Okay, after the dust settles in Georgia, Moldova, Ukraine, if it settles, the Baltics are next on the list. This is interesting. I wonder if this was an intended consequence of what the Trump campaign tried to do with their transatlantic relationship. Because again, I'm not going to criticize the fact that European companies should spend more, European countries should spend more on their own defense. Eastern Europe does, but Western Europe certainly does not. So finally, they're waking up. Merz got that €1 trillion package, up to $1 trillion, I guess, with no limit package passed with the old government in Germany, which is pretty wild. So the slumbering German defense economy is going to wake up, and the UK was always awake, but still, it's got more work to do. And Yeah, it's interesting. I think it's interesting. I don't think that this was necessarily intended. Okay, so we have defense stocks well outperforming in Europe, well outperforming U.S. Nearly all U.S. stocks in the red over the last 3 months. Obviously, I'm recording here to a mostly European group of friends. I know my Eastern European friends agree with me here on strong defense for both Eastern and Western Europe, but it's getting, it's getting heavy when we see a lot of Russian propaganda that's just simply being parroted from the Trump administration, not taking the Ukrainians' concerns seriously. And of course, the most, you know, pulling on the heartstring type topics, such as the 20,000 children being returned, are mostly ignored. These are ignored, not necessarily addressed, and perhaps, although I don't necessarily believe this, it was either intentionally or unintentionally some of the investigation work on finding these 20,000 children was deleted. So really scary times, I would say, for us in Eastern Europe. And again, Ukrainians are paying the most cost. I don't see this changing for a while. So I'm wondering what you guys think about this. Let me know if you think that this is good for Europe, bad for Europe, where the U.S. is going to fit in on this. There's a lot of open questions here as we move into the NATO summit this summer and in The Hague, I believe it is, and further on into next year. There's just a lot of open questions about how Europe will do decoupling from the U.S. military-industrial complex, if we can even call it that. And that is the interesting thing, again, to our friend Ryan Macbeth. I don't necessarily think, let's look at revenue here. You know, 80 billion for Raytheon, 40, 50 billion General Dynamics. It's not, I mean, they're big, but then, you got a couple big ones, but then you just have, a couple billion, million, 100 million. These are not large companies compared to Dow companies, compared to FANG stocks, compared to plenty of other SMEs in the U.S. So I thought that was interesting. There's a lot of noise in the markets these days. Let's go back to this chart. I would say don't get distracted by the noise. The only thing that you can do to really protect your family, I would say, is have backup plans, especially if you live in Eastern Europe. And make sure your keys are in many different jurisdictions. Multi-sig is even better than that. But we're right on trend here. I don't see anything, any major breakdowns compared to like what happened here in 2022 or in prior cycles. I think this is just standard trend. And I also do think we will have a pop towards the end of the year or into the start of next year. Even if the cycle is a little bit elongated or prolonged, from 4 years to 5 years, I do think we'll have another pop like we've had in the prior cycles. There's your estimates for end of, let's go here. Estimates for end of 2025. Again, $125,000 Bitcoin is the trend. 90th percentile, which is a lot of observations, only 2x the trend. 90% of the observations have been that in the past, 250,000 by the end of next year. Hope you guys are well. Hope you have a great week. Let me know in the comments what else you would like to see as far as some of these charts go. Take care, guys.